Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today was Friday. Thank God it's Friday. TGIF. October 12th, 2018. Yes, I know it's the 12th. I don't need to look at my calendar. But I'm going to grab my notes and talk to you for a little bit. And like our little Friday chit chat I do occasionally, and where I am and where I'm planning on going and what I'm trying to accomplish and all that happy horse manure. So let me get comfy. Let me move over and let's talk. So today is October 12th. So what is going on with you guys? I am just hanging out. You know, I'm in one part of my life. It's kind of some of the best days that I've ever had in my life. You know, as a parent, being able to see your own children be able to play in a sport that you love. Or I would say this, that I like the Steelers. I like Pitt Panthers. I like Penn State. I like the Tennessee Volunteers, but nothing compares to watching your own children play sports. So I remember when I was out there watching them, that how the pride that you feel seeing your own kid play, and I'm sure those of you that have children and watch them play as well understand the pride that's associated with watching your own children do something that they enjoy to do and watch them excel at it. So my oldest has been able to move he's playing varsity and actually starting as a sophomore. Best I ever did was dress as a sophomore. He's starting, and I think part of that's because we just don't have a lot of talent at the senior level. But the other side of this, he's 6'2", 225, and he's holding his own. So that's kind of cool to see. And my youngest son is playing on the 8th grade team as a 7th grader, and he's starting at middle linebacker. And I'm not one of those parents that's the helicopter parent. You know, I'm not. I don't. For the most part, I don't really talk to the coaches about, you know, the kids. I mean, they know me. I know them. You know, and I allow my children to. It's up to them to earn their spots. You know, I'm not going to be that. Well, you know how it is. Some parents are political and other parents aren't. I'm not into the political side of. I believe my children should earn their spot, and hopefully that resonates with you as well. So that's how I try to, and that says a lot about how I am as a person as well. You know, I don't. I look at trading in a sense that right now it's almost, I hate to even say it though, because it's just a simulator right now, and I've been trying all kinds of things at this point in time because I'm giving myself up to the end of this year to determine what I want to keep, what I want to throw out, what I like, what I don't like. Can I trade to? When can I trade to? So as you can see, I progressed over to the trading side of the video now. But you know, all of that is what I'm trying to accomplish, and I feel pretty good about where I am. As an overall, you know, there's certain things that I know work. There are certain things I know don't work. So that's kind of cool to know. For instance, today being Friday, the early morning sell-off, I think it happened around 8:07, 8:08, 8:10, somewhere in that area, was worth a couple P to move down. So it's good to see. I wasn't able to trade the early morning. I had the honeydew list, but it was good to come back and see that things like that are working. So putting that into my plan, right? So for instance, you know, I have the CL pitch strategy. I didn't trade the Thursday with the 11 o'clock having to go to concussion management, but I had talked about that if there was going to be a surprise, maybe I'd get involved, maybe I wouldn't. There was no surprise in that inventory number. That I mean, there was a surprise in the inventory number. I think there was a 6 million increase. They were looking for 2 million, but the volume itself did not show that it wanted to do anything. So you look at yesterday and you can see that there was no right after the inventory report, there was no real catalyst to move the market. Now I think it sold off obviously during the afternoon session, but was there volume associated with it? Not really. Today I thought that we would attempt the $70 a barrel if it wanted to head down. It didn't go there. It kind of hung out around, I think it went down to a low around 70, 60 something in that area. I thought when it broke through that second time that we were going to see close to 70, but it stopped. You didn't see any volume associated with it. So is this the bottom of the range right now? Or are we going to, from the 77 high at the, was it 76 and a half high down to roughly 70 and a half? Is that the range that we're going to run in right now? So is it a $6 range? Are we going to move from 70 and a half back up to mid-range around 73, 74? That's the kind of questions that I believe that we're trying to resolve right now in the markets. That it's trying to resolve what's the new range at this point before, and then is the next move. Is the next move from here going to be up to the 80s, or are we going to drop down to around the 65 range? So that's kind of what the market's trying to do at this point. It's working its way through the things that it's trying to accomplish. Now with that, I'm trying to pick off trades as best I can, and where I believe that my biggest issue that I have right now is the fear of just once I get into a trade, moving to break even too quick, not trusting the signal that I have, getting out too fast. I don't know. There's a culmination of a bunch of different things that I can see that as I look back, am I trading with scared money? Not really, but it is affecting my breathing because I'm trying to, budget my life and my finances and still pay our bills, keep the lights on, and obviously continue to talk to you guys right now. One of the things that I will say this, that when I'm I wouldn't say bored, but when I'm need kind of a pick me up or a boost, I look at things that, what if I would have went down this path? Now the what if that I consider is long haul truck driving, and the reason that I consider that is that that's kind of, I wouldn't say it's the worst possible job that you can have because it's a good paying job. Once you get through a certain level of where you are. One of my good friends is a trader who's U.S. Coral Sea. He was a truck driver, long haul driver for a long time, and I learned a lot from him back in the days of TFC Forum and it was commodity charts. So there's a respect that I have for those that are doing the long haul. I mean, there's a serious respect and love that I have for them. There's a similar type of situation. We're both in an environment where we're pretty much by ourselves for the most part. On a daily basis. I have my office, they have their truck. I get to stay home with my children and my kids, they don't. That's the biggest thing that I have. And like I said, love and respect to all of them that are out there delivering our goods that we get to, put on our table. Like today, my son got a brand new bed. So he outgrew his other bed and we needed to get a new bed, and we ordered through JCPenney's, and the two delivery guys that came to deliver today, they're hustling and doing what they got to do to put food on their family's table as well. So much love, much respect to those that are out there working their ass off for America and for their own families. So what can I do? What can I accomplish? Some of my notes that I wrote today is I need to follow highest volume bar. At 9:41 a.m. CST, RBV HVB was highest volume bar at 1281. Now what that means to me is that there should be no short side trades until I would see something that competes with that. Now there was a tiebreaker bar that came in at 11:03 a.m. at 11:17. So what I'm getting at there, if you look at today's trading, there was a high blue bar, a high red, and then you had the offsetting volume bar, the tiebreaker bar, come in at 11:17, and that, or actually 11, it came in at 11:03 for 1117. That was the move that you could have picked up the long. There really was no short side trade to take on except for right at the open of the New York time open, 8 a.m. CST time, to get involved on the early sell-off. So what I wrote down is my thought is $70 a barrel in range, is 70.51. Is that as low as we're going? So obviously now as I look over the charts itself at this point in time, now I don't know what happened into the close at this point, but 70.51 was holding at this time. Do we go underneath that? Are we going to? I would assume that we're going to close out around 7,100 or $71 a barrel right now. Between that would be where I think that most likely we're going to close out, without some kind of event or some people in the know that would drive it down $1, up $1. But just assume that the $71 a barrel will probably be where we're going to be looking at trading coming in on a Monday of next week. So one of the things that I wrote down is if you are going to trade, likewise, as we relate it to like the truck driving industry, they have that clock, right? They have their internal clock. They also obviously have their clock that they have to get up. Like they have a 10-hour off after being on, say, for 14 hours, the 10-hour off, and then back off on that road again. Likewise, as a trader, you've got to determine when is that time period that you are, and you got to stick to it. So a lot of my issues that I have as a trader is when should I trade? Should I be trading at this point? Should I be trading, should I go through the overnights and trade? And finally I came to the conclusion I really don't want to be trading in the overnight. I want to be a specific time that I'm looking at trading. And I believe that you can make a living by being extremely patient and waiting on your setup to happen inside your trading session or time period that you are working in. So for me personally, if I make this a Monday through Friday type of gig, then I'm looking at roughly, for the most part, looking at Central Standard Time, looking around to be up and running by 7:30 a.m. CST, 8:30 my time, going to about, I don't know, 10:30 to 11:30 on any given day. So about a 3-hour window of time that I want to devote to trading. And so that translates out to about 15 hours to 20 hours a week that I want to devote to a full-time trading. And I mean, you could trade around the clock. If you're a younger individual trading around the clock, picking off trades, yeah, I mean, you could find yourself working, sleeping. If I had no family, had no friends, and nothing right now, I would probably look at trading around the clock. Round the clock to me would be, I'd be off after the say 2:30 my time, so I'd be looking to sleep from, let's say, 5. I would try to get my 5 to 8 hours in between 5 o'clock p.m. to about 2 in the morning, getting up at 2:30 in the morning, and start going on that trading day, starting around, like, say, 2:30, 3 o'clock, and going to the 1:30, 2:30 period. So you would have like a trading day of about 10 to 11 hours, about 4 days a week, with Friday being a short day for you, stopping, not trading the overnights normally on a Friday, and then maybe not even trading some other days. But that's for a younger person. That's for a younger person that can devote, you can devote a lot of time to trading. I would tell you that more times than not, you need to be on your off time, especially in your early part of your trading career. need to be studying not just the markets, but getting some good books to read as well. Right now, if you look at what I'm reading, I like to prop a book every so often. Right now, this is the book that I'm reading, Elliott Wave Principle by Frost and Precher. If I'm not mistaken, no, that's Edwards and McGee that put out another book. I'm almost positive I've read something from these guys before. But Elliott Wave Principle, I mean, if you look at a trading day, I think a couple days ago, there was a nice little setup that you could have said a day trading range between the 0 to the 5 point, 0, 1, 2, 3, 4, and a 5. I mean, there was a nice, I think it went from like 2:30 a.m. CST to, around like 1 o'clock our time, 1 o'clock, 1:30 CST, that it stair-stepped its way from 0, and I was looking at the wave on the down day itself, and it was a really, really nice down trading day. I didn't get much out of it. I think that was a day that only got like 14 ticks. And then another day when I saw another day that only got 18 ticks. So I how has the crude oil market changed over the years that I've been trading? What I can tell you is that the backfilling of a market right now is a lot greater and is a lot deeper. The market ends up doing a lot of backfilling in both directions. It moves up and through a break-even point on lots of trades right now. I mean, um, it's a frustrating experience when you're in what you believe is a very, very good trade position and the market moves back. Say, the market goes 35 ticks your favor, and then it comes all the way back and through your entry point. Those are probably some of the most frustrating days, especially when you're looking at something and you see, well, there's no real reason, at least the way I look at it, for volume. There's no support and resistance areas that we're running through. Fibonacci's not coordinating. Why is the market go down so often and then come all the way back up to only go back down? Where do you put those stops at? How do you use, in the lack of a better way of saying, how do you use your 50 ticks in the 30K combine productively and efficiently and effectively so that you can stay in the trade and allow yourself the best opportunity to catch these 100 tick winners right now? I mean, right now the markets it's giving. Like if you look at a 3P movement today, it's 82 ticks. If the market would have given you a 3P movement today, we're talking 82 ticks. You can look back at when the market's not this volatile and it's less than 40 on a 3P move, that you're only getting like 15 and 30 and like say 45 in a 3P move. So right now, you can look at the volatility measurement of the market and it's rewarding a lot greater of an opportunity to be able to capture a lot greater profit. The upside, that's the upside. The downside of this is that the market is backfilling a lot deeper and a lot further before it retraces and makes its move, that it goes in the right direction. So you see me debating about how to hold that second contract. Should I be having a second contract? How far should I allow the market to retrace before I'm getting out? I mean, there's trades that I have got out within a tick or two, and you've seen this in your trading as well, and then the market progresses and moves down to profit levels. You think, wow, why is the market moving to a certain level to come down so far? And you really, I mean, if the market moves so far your favor, especially as I look at my trading, if the market runs what I consider a 1P movement, what do I not want to see? I don't want to see it move back to my entry point at that point, and that's really tough when you see. So, but on the other side of that, if you are confident in your entry point, maybe the best way of handling it is just, at least until the market conditions change in some way, is leaving that stop there and allow the market to do its thing throughout that trading day. Maybe there's some days that are going to give you 80, 85 ticks right now, and there's days that that you get in and then it goes 60 your favor, and you knock out it, and it goes 80 ticks against you at that point, and you get out at minus 12. I mean, that's not something I want. I just can't get my mind around that. But what you'll see a lot of times, that the market will come back to what it's called a break point, and it'll push through it a little bit, and then it'll head back down to a certain degree. Some of those break points that you see are deeper and greater than you expect that to go through. For instance, a lot of times when I'm looking at a break point, I'm looking at about 3 to 5 ticks above that break point, and that for a long time was a great place to put a protective stop on a trade. Now sometimes it'll go 20, 25 against you before it takes off the other direction. So then you think to yourself, do you want to take that loser? Not really. Do you want to allow that market to go that far against you? Not really. So that's where I thought about, all right, so this is a great trade position to be in. And then you think to yourself, all right, let's add to. And that's kind of where I am right now. I'm in where I believe is a great trade position. So if I take my trading opportunities down to, say, 1 trade a day, and that 1 trade is the best trading opportunity that I can find inside a trading day, for instance, and I wait for things to come the way I want to, and then I take that on right now. That's kind of where my thought process is right now. So how do I combat that backfilling? Well, maybe since the market is moving, and this is not rocket science right now. So if the market's going to move 1p on a good trade setup that I have, for instance, a 1p setup today was it's here somewhere. Oh, here we go. Just give me a second. Just wrapping up my day. So a 1p setup right now today was worth 27 ticks. So you've got how do you protect that stop? I mean, do you run with 1/2 R on one and a full R on the other? So that's where it gets risky at this point. So if I run with 1/2 R on both of them, what's the odds of it going in my direction that get me in and pull me out? So in that case, where do I find? Do I say to myself, all right, this is my trade setup that I've got, and then I say, all right, I'm going to go minus 40 at this point. So I say, all right, minus 20 right now. 1R is 22.4. So I go at minus 23 on both on the setup itself, and if it moves against me, it's minus 46. So that is like maximum loss. Or do I take somewhere in the middle of that? So if I'm willing to take the problem that you run into is this. This is the illogical part of all of this in my thinking right now. So if I'm willing to risk minus 46, but I'm only getting, like, say, 27 on the one side of it, that means that I've got to be able to, on those 2 contracts, I got to be able to take out more on a winning percentage as an overall to make up for the ones that go against me and knock out, that minus 46 or minus 40 in any given day. So can that be accomplished in any given day or week, or is it just trading one right now. Trading one for me at this point in time is not working so good. A lot of times, where I find that one contract trading, I'm getting out of the trade and then it moves my direction. So the other side of this is, all right, so if I'm going to just trade that one contract and I hold myself down to, dogs, be quiet. I hold myself to the one trade and then I put it at the minus 20, then I have another trade set up that I can go minus 20 to go down minus 40. So if that one doesn't work out, so the other side of this is, how do you use that? How do you use that? So what I believe in is, if I'm going to follow the path of least resistance, if the volume is telling me that this is the path of least resistance until it proves otherwise, there I shouldn't most likely move my stop until there's something in the market that changes the market conditions, and at that point, that's the point where I should be, all right, this is where the market is starting to heat up. Maybe I should move in, and that's kind of where I'm getting at. So, a long story short, what I'm trying to accomplish is, I don't think that trading two contracts is the answer, because on the 30K account, you know how easy it is to hit minus 50. If you have any experience at Top Step Trader, you know that hitting minus 50 is extremely doable in just on 3 trades pretty much. You can be pretty close to, if you're running with like today, running with a 2/3 stop at 14.15, you lose 3 in a row, you're down 45 ticks. I mean, it doesn't take a rocket scientist to figure out that your trade setups are most likely the most important component of your overall trading. But then managing the trade, then you think, all right, I'll get the break even here, and then the market just barely goes up to your entry point, and then it starts to sell off, and you just look at yourself and you think, gosh, if I only did this. So that's as you can see, it's market conditions has changed even within the last year. When I was getting into funded, what I can tell you last year as into this year, the market conditions, very seldomly when I got into a trade that was a good setup, did it come back to take me out at break even. It would go deep, it would go far, and the backfilling of it was not as deep and as great as you see in today's market right now. The manipulation of this market is a lot deeper. And will it always stay this way? I don't know. What I can tell you is that this market still is the best overall market for really nice gains as far as I'm concerned. It just takes a different mindset to be able to hold on to the trade itself. And so I'm going to try to hold and try to use the information that I've just talked about to allow me to progress as a trader and move over into the funded account. As I look at this, what I've got to get myself down to is, maybe it comes down to only one trade a day at this point in time with the current market conditions that we're in. That, win or lose, I just go at it. I find the best trade setup that I can find in the given day, and if it takes me out, I trade for the next day. If I do go in to that next trade, a lot of the times that you put into that second trade, there has to be a valid setup to get involved in it after that. So I don't know. It's a difficult thing. Trading is not easy. Trading is, like they say, the easiest, hardest money that you're ever going to make in your life. And right now, working inside a simulator that even gives you positive fills and still not be able to get to funded. There is and there's days, I mean, I can look at my trading, even like today, I can look at my trading and say, all right, it went 1p my favor here, so um, I don't like to get out with the 1p trade because I know that if I'm getting 27 and I'm risking 15, yeah, that sounds good on paper, but then I have to look for the next setup after that, right? I would prefer to hold on to a trade that would pull out, minimally speaking, minimally right now, 50 to 60 ticks in this market, the 2p movement. So to be able to get that kind of movement, I think it's doable. It just takes a different mindset to be able to get it. It takes the ability to allow the market to backfill back into your entry point and perhaps even run you out of your trade to be able to take that next size. So if it's stair stepping, if it starts here, goes down, comes back, and then that next time through, sometimes that up through, it goes up through that point that you say, all right, this is the stop point. And it just takes a different mindset. There's no easy way to become a successful trader. It's just a matter of using your best that you have. In this case, the best that you have is the knowledge and the information that you pull. And the only real thing that we have as traders to control is where we enter and where we're going to exit the trade. We pick our time that we're going to trade. We pick our entry point. We pick our exit points. And for me to say that I want to be extremely patient on my entry, it goes against the logical nature that is my mental makeup. I want to get in and I want to trade, honestly, I'd like to get in and make it like a video game and I pull out 100 ticks every day. I mean, that would be an ideal setup for me to get in, and then I'm just smacking the Mac along the way and I'm making $4,000 or $5,000. I'm sure people are doing it right now in the crude oil market. They're making $4,000 to $5,000 a week right now, if not a day, being able to trade in a better mindset than I've got right now. I mean, it's there. You've got these moves that are moving 100 ticks in their favor. If you get the right, if you have the right, the right mental makeup to hold on to the trade itself. I mean, there's been movements that have given lots of profit. Just not happening for me yet. Hopefully this little talk, wow, 30 minutes of talking again. I'm gonna wrap it up here. So, life is tough. There's no free lunches. There's no easy button when it comes to trading. There's just a matter of recognizing where your faults are and doing the best you can inside of your mental makeup and your physical being to allow yourself the best opportunities that you can as a trader to earn a living at this. And sometimes you just have things that happen that you just scratch your head and you think, why? And there really is no answer to it other than the market changes conditions every so often. The market doesn't, why does some days so easy and other days so hard? I don't know. There's no real answer to that, but appreciate the easy days when they come. Appreciate and maximize those profit in those days. What I can tell you is when the easy day comes, you don't want to be getting out at a 1p profit target. You want to get out as much as you can get on that trade, right? You don't want to take 27 ticks when the market's going to give you 150 ticks, right? You don't want that. I mean, you'll trust me when it comes down to this. If you get out at 27 ticks and the market moves $1.50 your favor, you're going to kick yourself upside here to Sunday thinking, why did I get out so early? So if the market is willing to give you $1,000 in a trading day, meaning it moves 100 ticks your favor, those are some really good trading days. Those are days that are available right now. I just got to be patient and hold on to it and get it. All right. I will see you in funded soon enough. Those that are in funded inside Top Step Trader, thank God you're there. Stay there. Those that are working your way to funded, Hey, it's tough. Nothing in life is easy. There's no free lunch. There's no easy button. You just got to make it, you know? I mean, I don't know how else to do it. You got to be able to say, all right, this is what I'm going to do and I'm going to stick to it. That's it. All right, chit chat's over. Have a great weekend. Bye for now.